Hey everyone, it's Tom. Welcome back to the channel. If this is your first time here, just sit back and enjoy. We're here to get straight into what's going on with Kevin's big move. So, let's talk about it. Kevin just sold out of the stock market. Yeah, you heard that right. He liquidated nearly 100% of his portfolio, which could be around $20 million. And his fans? Not happy. Just a week ago, he was preaching by the dip. Now, he's out. This sudden shift has left a lot of people scratching their heads, feeling frustrated, and even a bit betrayed. Kevin's always been a buy the dip guy. But here we are, he's done a complete 180. Now, to make this clear, I'm not here to tear him down or throw around insults. Actually, I like Kevin's content, and I want to break down why he might have done this without any conspiracy theories or drama. The change came suddenly, almost like when the Titanic struck the iceberg. To put it in perspective, it seems like we're now at the lifeboat stage of this market crisis. Things aren't completely sunk, but there's major turbulence. And Kevin, he's navigating it in his own way. So, Kevin's good at what he does. He's a skilled communicator, great at pulling in an audience, and he knows how to create engaging content. But I personally don't think he's dishonest. My take? I think he's genuinely reacting to what he sees coming in the market. Here's why. From Kevin's perspective, he expects the market to go through more panic. In fact, he's predicting it'll peak between late January and mid-March. Now, I don't believe he did this with any bad intent. He's a family guy with kids and responsibilities, and maybe, just maybe, he had a moment of panic. With $20 million at stake, anyone would feel the pressure. So, what could have happened? Theory 1, he simply got spooked. And guess what? That's okay. It's his money, his future, and it's totally human to freak out sometimes. Maybe he thought the market had hit bottom, but when it didn't, he pulled out. There's no shame in that. But here's theory 2, which I think makes even more sense. Kevin might have faced a margin call. For those who don't know, a margin call happens when an investor borrows money to buy stocks, but if the stocks drop, they have to sell some to cover the loss. It's common for traders to use margin, especially when investing in high-growth stocks, which are often more volatile. So, if Kevin's heavily leveraged and those stocks took a hit, he could have been forced to sell to cover his losses. And if that's the case, it could explain why he's out now but might plan to come back in when the market stabilizes. Maybe he's just waiting on the sidelines for the Fed to announce higher rates and the market to truly bottom out. If he did face a margin call, I think he should clarify this. It would give everyone some perspective and ease a lot of the confusion. But remember, we're talking about his portfolio, and $20 million is just a small drop in the market's ocean. Even if he told his private group first, it wouldn't have made much of a difference in the grand scheme. Kevin's not just a guy who got lucky in the bull run. He made smart bets, especially on Tesla, well before it became a post-pandemic powerhouse. Sure, some people might think he's just another lucky investor, but I think there's more to it than that. The real question now is, what's next? Kevin plans to jump back in around March. If the market hits rock bottom by then, he'll look like a genius. If not, it could be a rough road ahead. But let's be real, no one can predict the future. Even with all the data, no one knows for sure what's around the corner. So, that's my breakdown of the situation. I'd love to hear your thoughts. Do you think Kevin made a smart move? Or did he let the pressure get to him? Let me know in the comments below, and as always, thanks for watching.